From SBI's Executive Briefing Center in Dallas, Texas, the most watched and listened to content in B2B sales and marketing, it's the SBI Podcast with your host, Matt Shares.
Hey everybody, welcome to SBI TV. I'm Matt Shares, the CEO of SBI, and I am joined by two esteemed guests today. Tony Erickson, who co-leads our TMT practice, and Steve King from Hexagon PPM. I'm really excited to have Tony and Steve here for the show, because what we're going to spend some time talking about is what pragmatic market-leading companies are doing to prepare for 2021, knowing that we are coming through the heels of a pandemic and a recession. So, Tony, Steve, good to see you. Tony, how are you, man?
Doing great, Matt. How are you today?
Doing well. So, Tony, I'll turn it over to you and let you set the stage.
Awesome. So first of all, thanks for having us both on the show today. Steve, thank you for joining us. When we were talking about doing this segment, I thought, who better than Steve to talk to us about this topic? And, for our audience, I want to introduce you and your company. So Hexagon is a publicly traded company based in Stockholm, 4.2 billion in revenue, over 20,000 employees. Steve leads the division, multi-$100 million vision called PPM. That group focusing on building sensors, software, autonomous solutions, primarily in the industrial and manufacturing space to bring automation and change to those industries. So Steve, welcome to the show. We're really excited to have you today and looking forward to some great dialogue with you.
Thanks, Tony. It is great to talk to you and great to have an opportunity to be on the show today.
So I guess maybe I'll set some context, and then Steve, I'd like you to provide Tony and I with a little bit of a view of what you're seeing. As we looked at our research over the past 6 months, and if you think about CEOs and their executive teams, what we found is they fell into really three camps. Camp one was this group that we called survivors. And these were people that truly were playing defense, and almost the environment was washing over them. Some of that had to do with their industry, right, and certain things that were happening. There was a very large group, almost 2/3, that were in this what we call observer category. Think about those people as almost playing point counterpoint. They're making a series of single moves. And then there's this group, 9% of folks that we saw that are accelerators, and they're actually widening the gap. And they're stepping on the gas, and they're using this time to really rethink and reimagine their commercial go-to-market strategy. One of the things that was interesting about the accelerators was the way they thought about demand drivers, and in certain end markets and verticals that they served. When I was catching up with Tony a couple weeks ago and he suggested that we feature you, made all kinds of sense. So maybe talk a little bit about what you're seeing, and I'll let you and Tony have some good dialogue back and forth.
Yeah. So the way you described that is exactly what we're seeing. So if you go back to last year, when we entered or were entering 2020, we were incredibly optimistic because of the different parts of our business that I can talk about. We really saw ourselves hitting on literally every one of these things. So going into this year, we expected a banner blowout year because we expected our core business and what we call sustaining our core to grow, plus new areas of investment to grow as well. And that had us really excited. Well, then, of course, the world changed and we had the things that happened at the beginning of the year. And so depending on how we looked at our business, we could fall into any one of those three areas you talked about. So we had some business that was based on macroeconomic drivers. And this was the part of business where we sell design and analysis tools into companies that design and build big industrial facilities, very heavily dependent on the energy industry historically. Well, clearly, when energy prices dropped, COVID hit, demand for energy and things went down, that project business naturally started to slow down. And there's really not much you can do to spin up projects that are slowing down based on those macro drivers. So if we had defined ourselves as only that, we would have been in let's cut, trim, manage costs, survive mode. But we're not only in that business. And fortunately, part of our strategy that we've been working on said, let's get into other areas of business that would give us more diversification. And two of those that I'll mention, one was you've got these large industrial facilities across multiple industries, not just energy, oil and gas, and chemicals. And these operating facilities and operating assets, well, now more than ever, they need to be operated more efficiently. They need to be operated more autonomously. They need to be able to be operated remotely, leveraging technology to do things where it was not as viable for people to be on site. So that for us, huge growth opportunity. And then another area we're looking ahead on that we also had been investing in is building and construction and urban type infrastructure. So what we're seeing there is as supply chains reorient around the world, as manufacturing shifts and sort of rebalances because people see the risk of being too dependent on certain locations or markets, as governments look to inject stimulus money, that whole construction and infrastructure business is just ripe for growth. And so what we're doing is we're managing our business that we know will come back as the macro market grows, but we're pivoting and spending even more time, energy, and money on these areas that right now represent growth opportunities. And so that's allowing us to hit on a lot of different cylinders and focus on a lot of different areas at the same time to kind of diversify ourselves across what's going on right now.
You know, Steve, it's an interesting point as you talk about looking at all three, because if we think about some of the macroeconomic trends, I mean, even just this week, think about some of the changes to the Dow.
Yeah.
Historical energy companies that are no longer going to be part of the Dow, manufacturing companies like Honeywell that are now going to be part of it. So great opportunity for you guys to capitalize on where the market is going, introducing autonomous solutions to those who have historically used more traditional manufacturing methodologies. So I'd love to double click into this a little bit more, because the whole concept of reassessing, reimagining, and reallocating, you guys were in a reallocation mode already. And it's just really a testament to what market leaders do rather than going through annual planning. You know, you're ready to pivot on a quarter's notice or even shorter than that so that you can go attack the market that's there. So talk to us a little bit more about the reallocation piece specifically, because I think that's what's weathering you guys through this.
Yeah. Yeah. So I've been with the business now 3 years. When I came in, we had a new president that came in about the same time. And so I was fortunate to join shortly after he joined, and he had a vision that we have been executing on since in a strategy for what we do with our business. So we knew back then, based on some of the downturn in the energy business, that market and being dependent on the energy market had ups and downs. When times were good, we had the market leading products in that sector for those people, again, that designed and built these large industrial facilities, refineries, plants, platforms, all of those things. But when the market went down, well, of course, our business dropped with that. Capital projects drop. And we would see a lag on the front side and the back side of that. So when oil prices would go up, we'd follow 12 to 18 months after. And when they would go down, we'd follow 12 to 18 months after. And we see this cycle that was happening. And so that's what we recognized. That was a critical part of our business, but we needed to start getting out of that into some of these other areas. One of the challenges we faced, though, number one, making sure that we were known in those markets where we had a lot of assets across the broader Hexagon, but there was not a lot of knowledge about how all these pieces of software and sensors and geospatial solutions and things we have all fit together to provide industrial solution. So one was we had to package these things up in a way that addressed definable business outcomes we wanted to talk about, the new customers we were going after with. And then the second thing was we needed to totally rethink our sales and marketing engine, how we went to market, how we enabled our field sellers, how we structured our services organization to support the kind of business we wanted to go after, how we generated demand. I mean, the list goes on, but it was a retooling of our overall go-to-market structure and our field structures to serve the customers we wanted to go after. And we started this 2.5 to 3 years ago. So, timing is everything and luck matters too, if you will. And so some of this is we find ourselves now with what I frankly believe is the best, enabling infrastructure I've ever seen. The team here has done a phenomenal job. We've had phenomenal support to invest in sales and marketing and the overall digital transformation of those functions. So we now have the elements in place that allow us to actually go out and sell these more complicated things to more sophisticated buyers that represent our growth portfolio. And had we not done that, then we wouldn't have had the engine to execute on this strategy that's so critical to our growth. So that was really something that, and looking back, was really critical to what we're able to do today, to have the elements in place that allow us to actually take a field structure and people out there and get them to go after and successfully build pipeline and win this new business.
So as I think about that, the thing I like about that is the PPM division of Hexagon, because of the autonomous nature of what you guys provide, you're kind of the digital disruptor, I'll say, within the broader portfolio of 35 plus tech products that you guys bring to market. How has that enabled you through, the changes we've all gone through in the last 5 months to communicate that strategy to the board and, under the great business cliche of never waste a good crisis, to mobilize on the agenda that you guys have set up for your business unit and the broader Hexagon?
Yeah. So there's one thing that, there's multiple things, but one thing that has really helped us out here is we just wrapped up our Q2. We're in Q3 right now, and we just completed 11 consecutive quarters of growth, which is something we're very proud of. And you go back to when I joined and when our president of the division joined, we had not been on that consecutive growth quarter after quarter trend. So literally within a quarter and a half, we got that back to a growth trajectory. Last quarter, we delivered the highest EBIT and margins in company history. So having that success in terms of the execution side has bought us a great deal of confidence from our overall corporate CEO and the board of directors, which means in terms of investment dollar allocation, we've been getting what we need to execute on our plan, and we've been delivering on that. The whole team has, and that has really helped us, as you would expect, when we go back now and talk about making other investments. And in fact, a lot of what we've done now has been picked up by the other divisions because the transformation of sales and marketing, the enablement infrastructure and elements we put in place in our go-to-market model and our shift from product-oriented and geography-oriented to segment and line of business orientation has really impacted the overall Hex AB company. And we're being, sought after now by the other divisions for best practices that we can scale across our full enterprise.
It's a great story. And one of the things that it really makes me think about is when you think about that second component, reimagining the go-to-market. I'll go back to some of the comments you made on sales and marketing. And you and I have had this discussion, but I know our audience would love it, is you've used this as a bit of a forcing function to think about how do we reimagine? How do we actually break down the barriers that a field sales force has geographically or with subject matter experts? Because you have such an aggregate portfolio of things, it's impossible to have someone in every geography that knows everything. But in a virtual selling world, you frankly break down those boundaries. And then also think about hanging on to it, right? Once you capture all this revenue, now you got to hang on to it. So your thoughts around customer success and really driving up lifetime value. So touched on those two areas and how you reimagined and began to deploy around it.
Yeah. So I'll start with one of the last things you asked because it's very important. Hanging on to the customers that we have, which is in excess of 50% of our revenue on an annual basis, that recurring revenue stream, super important for obvious reasons. Now, a thing about that is our solutions are very sticky. I mean, these are multi-year projects that people buy our design and analysis tools to support. These are multi-billion-dollar projects. When you get in there, and these things go on, in some cases 10 plus years, you're embedded unless something terrible happens or the project gets canceled. But that doesn't mean that you can't be sort of chipped away at the edges by competition for new projects or new elements of existing projects. So maintaining a focus on that existing key customer base, and we can count that number really in the, let's say, 100 or less customers are, the top of the top in terms of importance. We absolutely do not want to ignore, pull back, or not support them. So part of our strategy we call sustain the core, and that is with those customers, make sure they continue to get our latest and greatest innovations and projects and products. They continue to get the latest and greatest in terms of user interface. We continue to do more to integrate products to increase the overall value across the touch points between the design aspect of projects. So we haven't ignored that, and we've even assigned more people to help ensure they're successful with what they've got, because everybody's looking to see if they're getting value from what they buy with them. So that is very important, and we've not ignored that. But what we've seen is we can dedicate different resources to doing some of that do it better at a lower cost than our traditional direct field sales coverage model. So it's given us a chance to support that better. We've implemented some tools and things that give us better visibility into what's going on with those customers. And it gives us the ability to support them with people that can help drive that adoption, expansion, and renewal aspect of the overall customer life cycle. By doing that, we've been able to take some of the money we've, let's say, saved on traditional field selling models and reallocate it towards these new models to go after areas of growth. And we've thought about that from a clean sheet. And what we've said is, based on what we're going after, what is the best coverage model for that? Is it inside/virtual sales? Is it SDRs, an expansion of what we do with SDRs? Is it field sales? Is it partner sales? Combination of all of those, direct self-serve through online e-commerce. But we can go through now and look at our different categories of customers, the different things we're selling, and we can really start to map in a scientific, math-driven way what the right coverage model is for each of these areas that we're going after. So it's been a reallocation of how we've looked at our field selling cost, how we've looked at, a metric I love, cost per order dollar for different types of things that we sell. That's really been something that we've looked at a lot.
Hey, Tony, I wonder if, just one thought, as Steve was mentioning that, and you and I always talk about, certain companies that have this growth culture, right? This sort of born in it's in the fiber of the organization. Steve, something you said earlier, 11 quarters, right? Quarter over quarter growth. Can't do that. The way you've reimagined and reallocated, can't do that. So Tony, I'm wondering, and just because you guys have the context, as I've been watching you guys talk, jotting down notes as a viewer would, I'm thinking about the culture inside the organization, specifically this orientation around growth. So Tony, I don't know if there's a perspective. I know you have a vertical perspective, and you and Steve have spent a bunch of time together. I'm just wondering if you guys maybe could talk just a little bit about that as we sort of wrap this segment of the show up.
So Steve, let me give you a leading thought here, and then I want to hear your opinion because I know our audience will love it. You have an amazing strategy in place. You guys have been thinking about that well before this crisis hit, and that allowed you to execute. I like to say that strategy is where the blue meets the sky, and execution is where the rubber meets the road. So you're now in execution mode. You're maniacally tracking it. You've got a cadence. How do you maintain the momentum so that the idea doesn't just go off into the ether? Like, what is your operating cadence, and how has it changed top to bottom in the organization so that everyone knows you're on the right track and they always know what the scoreboard is?
Right. Yeah. So a couple of things on that. And Tony, I know I've mentioned this to you before, Matt. I think I'd mentioned it to you. When I joined 3 years ago, so our president came from corporate, so he had been with Hexagon AB for about 10 years. So while he was new to the division, he wasn't new to the overall Hexagon family. To the division that I came in, I was the first outside senior executive they'd hired in 10 years. And so that was a big change. The other thing is this division, if you go back to its very roots, was a company called M&S Computing, which was started in 1969 by some scientists out of IBM that were doing work with NASA on the space program. This company's been around for 50 years, if you look at against its roots. So you got a guy coming in here, first new guy in 10 years at that level, with a change agenda and a new president coming in and telling this company that has been around a long time, they need to change and they need to do things different. And the joke story that I've told to several people is when I first came in and went to every sales kickoff and was passionately talking about all the great things we could do to grow the business, needed to do, to me, it was a compelling story. But the question from one person was, if we've been around 50 years and after hearing you talk, is there anything we're doing right? And so that was a big word, in a way. It's that, of course, there's things that we're doing right here. We wouldn't be here 50 years. So this cultural shift is when you've got a company full of people. A lot of people here have been here 25, 30, 35 years, and what they've been doing worked because it was a market-leading product in a market that was growing, and in that market climate, good things happen. But then things changed. And so from a culture standpoint, it was, number one, convincing people that we needed to do things different while respecting what got us to where we are. And that was not throwaway. We got to keep doing that too. And then the other thing was, and we did this very early, is, and it's something I'm a big believer in, is we have got to identify the behavior and activity metrics and the leading indicators that allow us to celebrate the things we're seeing that are working along the way. So what we put in place, and we did this in a way that was persona specific. So what a frontline manager sees, or a rep, or marketing, or the management team, we could see these early indicators that said, this is working. And this is worth continuing to invest in, because we know if these leading indicators are executed on, we'll see good things out the back. And in fact, that's what we've done. And we have gone to great lengths to make sure we communicate the success. We've built a robust management of change and comms program in place. Again, there's certainly a lot of pride that comes down from the multiple quarters of successful growth. And from a sales standpoint, if you put more money in salespeople's pockets, that's always something that gets people and fans on board. So the excitement here over the past couple of years has gone up tremendously, and that's been real rewarding and fun to be part of.
Great story, Steve. Great story. So, Matt, I think he nailed the culture question.
Yeah, he did.
We'll turn it back over to you, man, as our host.
So, guys, great to see you. So, Tony, thank you, and Steve, appreciate your transparency and just always willing to share what you're doing. That's allowing you guys to really lead the charge, but also you can just feel the energy coming through the screen. Wish I got to see you in person, but at least we didn't have to keep a mask on while we looked at each other this way. So, thanks again for your time, brother.
Hey, thank you, Matt. Thanks, Tony. Thanks, guys.
So there you have it, folks. You got a great example of what it means to truly be an accelerator if you think about your market opportunity. What you heard from Steve and Tony was the ability to reassess, then reallocate, and then drive execution with a reliable cadence at the individual role level. That was a big takeaway for me listening to how Steve articulated so cleanly. So as you think about 2021, stay pragmatic. That is what market leaders are doing. Until next time, I wish you good luck as you try and make your number.
This has been the SBI Podcast. For more information on the studio, SBI's Executive Briefing Center, our team, or to schedule a workshop, please visit salesbenchmarkindex.com.